today, I want to talk about SHX and the merchant rewards and merchant financing options that are actually tied to it, and how the token burning that is now 100% finalized after the first governance vote will impact that. So before that, let's have Sean explain a little bit more.
Expansion of participants for the merchant financing program. It's hugely popular. We have too many applications, and we cannot fulfill them all. And of course, we have to, make sure they're actually good businesses to lend to. But we're fully subscribed on that front. It's unsurprising given the current economic climate as well, that people need cash to grow. In that program, any newly underwritten cash advance has an origination fee, or it's called administrative fee here, paid in SHX. Generally, you'll see origination fees on cash advances at 0.5% to 1%. The ISO piece.
Okay, so from K. Hengall here, merchants pay an origination fee in SHX. If the math is right, the max loan available is around 250K right now. So as per this, if the fee is up to 1%, then that's up to 2,500 in SHX fees per maximum loan, with a percentage being burned as well, and not going back to the liquidity providers as a reward, which will make the maximum supply of SHX deflationary, and as there's more activity with SHX, that will help to increase the price of SHX as well. So why is that actually important? Well, here is why.
There's tons of payment providers out there. I mean, Stripe is the big obvious one. Our niche is working in industries that have high compliance burdens. And a good sort of a rule of thumb is if there's some sort of buying restriction, age is a good one, such as alcohol, gaming, gambling. They have strict regulations, and often there's KYC around the purchasing. So for them, as well as just sometimes a stigma around what those businesses do, they're unable to get banked or receive extra financial services like cash advance from the traditional players. Our mission is financial services for all. So that's the problem we're solving.
And why is that important in terms of the price of SHX with the merchant financing and the merchant rewards programs that involve SHX? Well, it is because of this.
Stronghold is a next generation financial institution that is native to the blockchain. So what that means is that we kind of act like a normal financial institution, like a bank, and we allow people to deposit and withdraw funds from us, whether it be fiat currencies or other stores of value like Bitcoin, Ethereum, and soon probably stocks and bonds, and so forth. It was the first head of growth at Stellar.
So you just heard from Tammy Camp that the company is actually acting like a financial institution, like a bank, because they are actually providing loans to companies that might have a hard time securing a loan from a traditional financial institution. And there are a lot of those, and it's not just around what kind of a company it is. It might be because the people involved don't have the right kind of credit or credit history, and these kinds of decentralized financial services will just help expand more and more companies and ultimately our overall economy, and it will obviously help to expand the value of SHX, the actual token. So the burn vote is actually really important in this. So here is an overall review of what actually happened. And here was the announcement that was made on January 17th of 2024. And here are the published results, which we just showed in that overall shot. But the important thing is down here. So the weighted average burn proportion that was found with a weighted average on the voting totals rounded to the nearest 5% results in a 70% burn rate, which means that 70% of the origination fee should be burned, with the remaining 30% paid to pull contributors. So if we go back to our original example, that 1% fee of a 250K loan would be a total of 2,500 in SHX, but that would only be about 30% of that, which would be 750 in SHX that would actually be returned as rewards, with the other what is that, 1,750 actually burned off. And that will over time, with more and more volume coming into the actual company, and that moves on SHX, that will help to reduce the supply, which off of just supply and demand would help to increase the price and value of SHX, the actual token. So here is another example from Crypto Banker SHX. If the burn is passed, and we now know it has been, then it will consistently reduce the max supply of 100 billion with every merchant advance fee process. So example, the max fee 1% is 2,500 on a max loan of 250K. If we assume that the burn rate is 50% of that fee, if we assume that there are 1,000 merchant loans each year, then that equals 1.25 million worth of SHX being burned forever at the current price of 0.0043, which is not what we're at right now, but it's pretty close. That would equate to 290 million SHX burned from the max supply annually. So, of course, because we did come out to a 70% burn, that amount would actually be roughly 1.4 times that. So what, around like 450 million SHX burned. I did that off of the top of my head, so I apologize if I'm not exactly right, but that is painting the picture of the deflationary nature of SHX as we move forward. So that raises questions around the maximum supply. So here is a shot from, I think it's an old version of the white paper, because I checked online and I can't find that in the existing white paper, because it only goes to 31 pages, and this is on page 37. So I'm not really sure where that came from, but I trust that to be true because I have seen that in a couple of spots now. So off of CoinMarketCap, the verified circulating supply is 14.4 billion SHX, not the 5.8 it shows on here. And that would put us right about what, here on this chart. So yes, we will see a pretty good ramp up of the circulating supply, but this is through 2050. So I'm not sure what the x-axis is, because that would be 30 years. So I guess that was from 2020. So it would make sense that we're about here now. And with the burn vote passed, even after it does hit its highest point on this curve, it will go down as well. So that won't have huge impacts, as we are on this on the upside of this roughly logarithmic curve, but it will still contribute to helping to increase the price of SHX, just because of you are reducing the supply and you are expanding in your demand, so that helps to increase price. And while we are talking about price, I don't have trading view up because we are holding in this about 0.4 cents range for probably about 3 weeks now, and it hasn't gone too far away from that. And if you look at the overall price action all the way back to 2019, it hasn't really been great for a long time. But if you change this to a log scale, there is a lot more interesting price action in here. And as you can see, we have picked up a whole lot, and we are roughly at about this point right here that we were as we were working into our last bull run in about April of 2021, and we did peak out at about 4 cents or so. I think that went up to about 6, and if you go on an XLM chain explorer site, then it actually shows a peak up to, I believe, 19 cents. So I believe some people, if they were trading on an XLM DEX, were able to see far higher than this 4 cent mark. And I think that we can surpass this by a pretty good amount with what the company has been working on ever since 2021, and because of the connections to XRP and XLM, as I have talked about in a lot of other videos as well. So here is that shot one more time, and we will also have the first SHX burn vote in the fourth quarter of 2023, and that is now complete. So not only is the merchant rewards and merchant financing options that involve the actual SHX token, not only are those helping the price action of SHX, but it is also turning the company into a alternative for traditional financial institutions.